This is Frank Blakeley from the Aliso Viejo branch of American Capital. So what we talked about last time in our last segment was lock periods with a loan. Now what we're going to talk about is the cost of a loan as it relates to the interest rate that you're being quoted. So we talked about closing costs. Closing costs are all the miscellaneous fees that have to happen in order to get the loan funded. So in an average loan, again, $350,000, our closing costs is going to total about $3,700. Okay, so those are always there, but again, whether you pay them or not is really the important thing. The next compensation is how the loan officer gets compensated, or fee. It's called an origination fee. An origination fee is approximately 1% of your loan balance. So for us, it's $3,500. So when I'm talking to my loan officer, there are going to be $7,200 in fees somewhere. It's just whether or not you are paying for them or not. And this is how it works as far as the interest rate that you're going with. So every day, rates go up and down. Today, we have a par interest rate. So a par interest rate is the rate before you have to start paying points to get a lower interest rate. So it's today's 30-year fixed rate without paying points. So today that rate is 4.125% on a 30-year fixed. Anytime I go below that, so for instance 3.875, which is a great rate, well, I'm having to pay these points. Points are 1% of your loan balance. So today I would have to pay 1% in order to get a 3.875 30-year fixed. So when I talk about this rate being quoted the rate and the cost, today's 3.875 30-year fixed would be $7,200, the origination and closing costs, plus the points. So that's $10,700 in total to get a great 30-year fix at 3.875. So now we've all heard of no-cost loans, right? Or low-cost loans. So what starts happening as you go above par on a 30-year fixed, there's back-end money and rebates that are paid from the bank to whoever's doing your loan. So today in rebate, we are getting paid 2%. So now on that $350,000 loan, that's $7,000. So at this rate, at 4.5% today, you can get a 30-year fixed for only $200 because we're using this rebate to offset the $7,200 in total. So when you work this all together, what we're going to be talking about next is really, okay, what is the best way to go? Do you pay more up front and get a lower interest rate, 3.875, pay a little bit less up front and get a little bit higher interest rate, but still a great rate, which really makes sense? And really it depends on your goals, and we'll talk about that later.